heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Nvidia pays the price of lofty expectations. CEO Jensen Huang tries to boost confidence in a Bloomberg exclusive.
Plus, the Telegram CEO is charged and out on bail in France over crimes committed on the app. We go live to Paris.
And California advances its controversial AI safety bill that has divided tech leaders. We discuss the law as it heads to the state Senate. That and so much more coming up. But first, we check in on the key name that we are all watching today. Nvidia, off by 2.8%. The $3 trillion company not living up to the hype in terms of its forecasts, and particularly Blackwell, which we'll dig into, Ed. But it's not dragging down the rest of the indices.
Market up, Nvidia down. I caught up with Nvidia CEO Jensen Huang after the results. He addressed concerns about the company's latest generation Blackwell chips.
We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3, and we're expecting Q1 to have more supply than Q4. And so I think our supply condition going into next year will be a large improvement over this last year.
Kunjan Sabani of Bloomberg Intelligence joins us now in San Francisco. You said it, Nvidia strong, expectations stronger. What's your thesis this morning?
I mean, they have fallen victim to their own strength and unrealistic expectations. When we look about the top concerns going into the print, Blackwell,
right.
The several billion in Q4 puts a lid on uncertainties in 2025. Demand sustainability.
Just real quick, because several billion doesn't mean anything.
Well, it still is solid in terms of what we expected, or given the last 4 weeks, what we have been hearing, the issues. So that's still impressive that they are able to pull it off so soon. Second, demand sustainability. We saw demand broadening and in fact getting stronger beyond just the large cloud guys. And finally, when we put it all together, our estimates, and I believe most of the street estimates, are actually going up after this earnings than they were before.
Kunjan, yes, perhaps it's a victim of its own success and analyst investors' exuberance around the name, but is it also a victim of its own ambitions, setting itself terms of time that just aren't able to be hit when we see that people are disappointed by a Q4 and later ramp up for Q1, Q2 of next year fiscally?
I mean, definitely, it's part of two things. The execution they have performed over the last two years have been nothing but phenomenal. It's very hard to continue with this annual cadence, reiterating the new chip designs at time, bringing the supply, not just at scale, but at new technology modules. So it's definitely a high bar they have set.
I actually want to talk about new technology model. There was a question on the analyst call, which I also tried to get into with Jensen Huang, about generational upgrades. Right now, H200 is ramping, being deployed in the real world. And before we know it, Blackwell's here. So if you're a data center operator, you have the option of both potentially at the same time. How do you model for that?
I mean, each data center operator is at a different technology stack and a different phase in this journey, right? So there has been a pent-up demand. So I think right now, this sort of tier 2 and low enterprises and the new up-and-comers who are installing this base would choose to go for the H200. And Blackwell is not really for everyone. You really need significant ROI, significant investment to implement Blackwell.
What about geographical reach here? Were you worried in any way about the China pullback?
No, I mean, this is the first time we saw the U.S. decline sequentially. We don't think there's a lot to read into it, but it definitely outlines that the demand is broadening outside of the U.S. When we look at rest of the world other than U.S. over the last few years, the growth there has been significantly faster, and that leads to that sort of low double-digit sovereign $1 billion that Jensen outlined.
Kunjan Sabani, it has been a busy 24 hours for you. We appreciate you, Bloomberg Intelligence. Meanwhile, let's get a broader market reaction. Anthony Singlomeni is with us, Chief Market Strategist at Ameriprise Financial. Who would have thought it, with all of the hand-wringing that Nvidia is so important to the S&P, to the NASDAQ, of 8% weighting, benchmarks are higher, even though the name is down?
Yeah. At the beginning of the week, we kind of said, move over Powell, here comes Jensen Huang. And you're really kind of seeing the markets just kind of not really react to NVIDIA's earnings last night. And I think it's because earnings were positive. As Kanjan mentioned, the wow factor is starting to come down because the hurdle rates are getting higher. It's getting harder to achieve that. But overall, the delivery of profits and outlooks last night from NVIDIA were solid. And so I think the market is starting to kind of look forward and say, hey, everything's okay with big tech. We're going to move over the next couple quarters. Macro is obviously going to be a concern coming here over the next few weeks and as we get rate cuts from the Fed later next month. But I think the story in big tech is less homogenous trading, a little bit more focus on, where's the payoff for AI, what's the supply and demand build for companies like NVIDIA moving forward. And I think it will likely provide opportunities when we get some of these pullbacks for investors to reassess and maybe look at stocks that got away from them earlier this year.
Would you say that NVIDIA, I don't want to go into individual names, but would you say at these sorts of valuations when today Apple, Microsoft, Amazon, Meta, Google, Tesla are all the top performers in terms of points in the S&P 500, should you be racking up more in technology with valuations at these levels?
You at the top, you said, like equal weights in these companies and in technology, just holding an equal weight is 30-40% of the S&P 500. So I don't think you need to get over your skis around, extending positioning in these areas. But when we do see pullbacks in these big tech leaders, this is the time to start looking at them, at least if you've underweighted the area. Our view is that there is a broader group of stocks that are more attractive. They're particularly more attractive as earnings growth expectations are moving higher for areas outside of big tech. The economy seems to be on firm footing. The GDP grew by 3% in the second quarter. And the Fed is likely to start their moves to lower rates over the next few months and few quarters. So the outlook for the rest of the 493 stocks that aren't the Magnificent Seven are starting to look more attractive. And that's what we're seeing this month. Consumer staples, healthcare, utilities, they're all at the top of the charts for August. And that might be because September is a pretty poor month for the market.
Antti, that's a pretty sweet Bloomberg terminal chart over your left shoulder. What is that? That's NVIDIA quarterly revenues.
That's right. And as the chart, if you can see it in the back, it shows the actuals and the estimates starting to get closer. And I think that's why you're seeing NVIDIA have a little bit more trouble start moving higher, even though they had great results last night.
So bear with me. I have a chart of my own. Let's bring it up. This is the beat in the quarter relative to expectations. And I think the point is that it was a 4% beat against consensus, right? 4% upside surprise. Have you ever experienced a quarter like this where everyone has just lost their absolute minds over a single name in a week where we had central bank speakers left, right, and center and more economic data than we can fit into a 1-hour program?
Yeah, no, I mean, I think the last, and you saw that volatility spike in early August. Some of that was the Japan yen carry trade. But I do think expectations are really high in these big tech, magnificent names. And so not only do they have to surpass and kind of meet the perfection standards that investors put on it, but they actually need to surpass them by even more. That's getting harder. And so as my earlier comments said, I think you're going to see less homogenous trading between some of these big tech leaders, and it's really going to come down to fundamentals and capital spending and what's the revenue outlook, how much are you beating. Those things will play a much more dominant role in moving share prices around. But at the same breath, you have a lot of stocks that have not kept pace with these big tech companies that remain attractive in an environment where we're growing. And so if the Fed is cutting interest rates and they can kind of engineer that soft landing, there's a lot of sectors of the economy that are more attractive today.
So let's finish here. In aggregate, NVIDIA and everything else that you've outlined, do you believe that this cycle, the investment cycle around AI, is intact and it continues?
Yeah, I think, and from your interview with Jensen Huang, I think it's very clear the AI infrastructure build and the architecture around that is in the very early innings. Some of these companies like Microsoft, Amazon, Meta, Alphabet, they spent almost $60 billion in the prior quarter on AI investment. They said they were going to continue that over the next several quarters. And so as these companies and as, sovereign AI that Nvidia mentioned last night, as these countries start to build that infrastructure, there is a lot of opportunity still left in AI. However, like the tech boom in the late 90s, early 2000, we go through periods where expectations get really high, they need to reset, and then maybe stocks can move higher from there. And I think we're starting to see that now with big tech and the AI theme.
Anthony Saglan-Bene, Chief Market Strategist at Ameriprise Financial. You believe. Thank you. Now, coming up, a conversation with Max Levchin, CEO of Affirm, following yesterday's pretty strong earnings report. Kara, you're looking at another name.
I am. Affirm's up, CrowdStrike up as well, more than 5%. This is it reported second quarter sales that basically topped analyst estimates. Remember, we were all worrying about the global IT outage back in July, but it doesn't seem to have had an immediate, as bad a result impact. We're currently higher. This is Bloomberg Technology.
Affirm delivering better than expected earnings, sending shares upwards. The company's fourth quarter revenue and first quarter revenue forecast, both coming in ahead of estimates. CEO Max Levchin saying the company had, quote, a killer quarter. Max joins us now here in San Francisco. I've spent enough time with you to know that when you say something like that, you mean it. I wouldn't say that you're prone to superlatives like that. Why? Why a killer quarter?
Numbers speak for themselves. I think,
go beyond that. Come on, just tell me the story of what's happening behind your platform and your user base.
I think there's a real momentum. You can tell by looking at our metrics and the qualitative measures that we take, and just the fact that we've outperformed the credit card industry, which is our direct competitor, in terms of managing credit and just the sheer number of launches and merchant signings. Like every metric that I could cast my eye on, say, wow, that is a really good quarter. And so, sometimes you got to take a bow.
Let's say the buy now, pay later space is let's say more competitive. Since last year on the program, maybe in that time, Caroline and I spoke with the Klarna CEO, for example. They seem very optimistic, particularly about the United States. Yet you continue to grow. I don't have any data for market share, but could you just contextualize your performance in that sense?
Well, I think we are outpacing them reasonably well in terms of our growth relative to theirs, at least according to the stated numbers. Not that I am too competitive, but
you are competitive.
I'm very competitive. Let's be honest. But the reality is it's a giant market, and all of us together add up to less than 10% of e-commerce, and all of us are now looking at offline. And so just the real share taking that's taking place is happening against cash, against credit cards, against debit cards, all the other payment types. And so there's just an incredible amount of road available to all of us, and Affirm in particular.
What does that mean in terms of the macro context then, Max? How confident are you of the US consumer, the global consumer right now?
Well, we're about to launch in the UK, so we'll find out exactly how confident I should be about the UK consumer. But the US consumer, again, look at our investor supplement. Credit card companies have built and built and built up their delinquencies, and ours remained very firmly in control. Our consumer is borrowing and shopping and paying back, which is really important for a credit business. But so far, so good. We do not see a major slowdown. We do not see a significant pullback in demand. There's always new industries. A quarter or two ago, I was lamenting the loss of interest in electronics. It came back roaring through the last quarter. Travel is a little bit softer. I think people got their post-COVID fix. But all in all, consumer is effectively shopping and buying and paying back, and I don't see problems.
Meanwhile, you're taking a bow, and the market in particular likes the focus on profitability. Now, I hate to bring them up again, but Klarna actually did post a profit even though they're still a private company. They're eyeing a $20 billion valuation. And they're cutting costs by leaning into AI. Is that something that you look at, Max? Something that you feel you have to compete into?
Well, the good news is that we've been in the AI business since inception. So 100% of our loans are underwritten individually every single time, entirely by machines. And so we've been on the machine learning and AI training since day zero. And we don't think of it as a way to replace humans or to get rid of humans. We think of it as a great tool for increasing productivity, to give us an edge in underwriting, customer service, et cetera. And so, yes, we're very, very active in AI. We have lots of really fun things happening, both visible and not to the investor eye, but it's a huge part of what we do. In terms of profitability, I said it last night on the earnings call, and I just want to make sure I repeat it. This was not a contortionist thing we just did when we said, hey, profitability is on the horizon. It is very much part of the plan. It's always been part of the plan. It's just now close enough where I can say, here's a date with history. We're going to get GAAP profitable and move right past it and do more.
Max and Carol, also bear with me. I am a firm customer in the sense that I used a firm to finance a specific thing. For what it's worth, it was the Peloton tread. But the reason I did it is actually an emphasis on point of sale. Mm-hmm. So when you go through, the audience is familiar, if you go and try buy something from Peloton, it's a kind of a weird transaction, but you're presented with the firm as an option almost straight away. Do you negotiate that aggressively for those kind of bigger ticket items?
I'm not sure individual deals are worth commenting on, but every deal where we are presented at the point of sale and every deal where you see it up funnel, as one might call it, before you even get into the checkout, are absolutely directly integrated. So we go to the merchant, we spend a lot of time with them making sure that we are as helpful as possible to their ability to sell, be it a Peloton tread or a mattress or anything in between. And that is what gives us a huge advantage. The consumer has the confidence and the clarity of what it might cost them to borrow money to buy something.
Max, while you're here, could I please ask you, there's a story out from Bloomberg Law about a firm facing a class action suit after the Evolve bank breach situation. Comment on that, please.
Probably a very bad idea to comment on ongoing or potential future litigation, so I'm not sure I have anything to say on that. I said it the day of Evolve News, which is certainly unfortunate, that the Affirm card numbers were all safe. We did not need to rotate them and give people new cards. That is now confirmed. No card numbers have been leaked, and our consumers are safe. If you have your Affirm card, please continue using it. It works just fine.
Thank you.
Max Levchin, it's always great to have you on the show. We appreciate it. He's taking a bow, the CEO of Affirm today.
Telegram CEO Pavel Durov was charged in France for complicity in the spread of sexual images of children and other crimes. It's a rare example of a tech leader being held liable for the way their platform is used. I want to get right to the details with Bloomberg's Alan Katz, our Paris bureau chief, and I think fill in the details. My understanding is Durov is out on a significant bail and there is a process to come.
There is. So he is out it's a sort of a holding cell is the way they do it in France from that 4-day interrogation that he had before being presented to the judge. He had to post a €5 million bond for that, so that's about $5.5 million. So it's a lot of money. That said, he's, according to Bloomberg's wealth ranking, he's quite a wealthy fellow, and so he could certainly afford it. And from here on out, at least according to the initial ruling from what's called a juge des libertés, he has to check in twice a week with authorities to make sure that he's still in France and he's not allowed to leave the country. So that's sort of the process in the immediate future. And now it goes to an investigation where the investigating magistrate will continue to look into the case, and that could take months, could take a year, longer. Like it's really unclear how long the rest of this process might take beyond that.
And really the case here is that Durov and Telegram, which he is CEO of, basically in no way helps when it comes to investigations. They refuse, it said, to run legal wiretaps on suspects, particularly when it comes to organized criminals and particularly sexual exploitation of children. Is that really what's at heart here, the fact that he doesn't want to take any movement, any action as a leader of a social media platform?
Well, yes. The action, though, that you're talking about is he deliberately, according to French officials, he deliberately did not respond to or reply to what they call legitimate requests for information or for help in other investigations that were running in criminal activities that they saw on the Telegram network. And that's different than the way that most other messaging services operate. And that's really why they issued the arrest warrant for him in the first place. And the prosecutor made a point of that in the statement last night, saying that that was really what was particular about Telegram as a platform, and not just in France, but she specifically mentioned Belgium as well as having the same issues with Telegram.
A near complete lack of response, as Paris prosecutor put it. We appreciate it. Alan Katz, thank you. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
And I just want to point out what is happening on the markets today, because we've had so much anxiety around this one name, all around Nvidia, the fact that it was the most crucial that it had ever been to the market. It's 8% weighting in the NASDAQ, it's 6% weighting in the S&P, would mean that the direction of travel after earnings would dictate that for the benchmarks. Not so. We're currently up 1.1% for the NASDAQ 100. Despite its 14% weighting in the SOX, we're up 1.4%. And it is lower by 3.6%. The reason it's lower, of course, Ed, is what you poured over yesterday was the fact that, yes, it still beat in its quarter that was just announced, and the fact that its forecast looked pretty decent, but it was some of the issues, the ramp up in Blackwell in particular, that caused a little bit of uncertainty, and you spoke to the CEO just about that.
I did speak with Nvidia CEO Jensen Huang following what was kind of seen as a disappointing earnings report. So bizarre to say that out loud. He laid out his and the company's expectations for next year surrounding the production of Blackwell chips. Listen to this.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises. So it's fairly diversified. Outside of hyperscalers is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
That was Nvidia CEO Jensen Huang speaking with me last night, Kara. And yeah, I mean, body language, what he's wearing, there's a lot to talk about.
No leather, Ed. No leather. He wore a bomber jacket. But look, there is a lot of deep diving on the numbers in particular. And let's get some of that reaction from our guests on Bloomberg TV.
I'm not concerned. I think if you look at Nvidia, they still control this market and will continue to, I would say, dominate this space over the next 3 to 5 years.
Delivering chips at this rate, at this scale, is fantastic and unprecedented. I don't think there's much of a revenue issue here, of a growth issue here. I think the little bit of a pushback is probably more around the margin situation.
That type of growth isn't necessarily realistic or sustainable in the long term. Two, it's not necessary in the long term either.
At the end of the day, we still sense enormous and urgent demand across the board, and that really mitigates, in our view, the risk of a pause in shipments as customers wait for the next generation of chips to be available in volumes.
Not enough. We need more reaction. Ayako Yoshioka joins us now, Senior Portfolio Manager at Wealth Enhancement Group. The market seemingly thinking it's a disappointment. Did you think it was a disappointment?
Hi, Caroline. I was not disappointed with the actual numbers here. I think, expectations were very high going into this particular print. And, especially when you hear of things like events in New York in which, bars were being rented out to see what the earnings report was going to be, it gets to a different level. I was not in one. I was at my desk looking at the numbers.
Joe Weisenthal, I saw, our Bloomberg reporter, was indeed out there in the bars. But I'm interested, Ayako, in, even though you did see this overall disappointment and very high expectations, was there any cause for concern? Do you still think, as Ed put to our previous guest, Anthony, that the AI trade is intact?
The AI trade is intact. I think we have to put this in the longer term context. Nvidia was generating revenues of about $27 billion about 2 years ago. They're on pace to generate revenues of over $125 billion this year. That's just enormous. Is that growth rate sustainable? It clearly is not, but they're continuing to grow, and the expectations are for growth of over 40% in revenues for next year. And Blackwell is just going to be another step up in allowing that to happen.
Ayako, Wealth Enhancement Group has 7.8 million Nvidia shares, $1 billion worth of stock. I know that you were part of our kind of watch party last night, watching the interview. You lead research, right? You use your expertise to try and work out what's going on. What did you work out during the course of that conversation?
I think this is a long game. I think we're still in the early innings of AI deployment. The hyperscalers, Meta, there's so much use from all of these. It is table stakes for these large cloud providers, and they're seeing productivity gains from the use of AI. So I think that's going to continue. It's going to proliferate. It is going to take time, but the internet took time as well. And 20 years later, it's still evolving.
Were you convinced by what Jensen Huang just said, we played in that clip just then, that their business has broadened out beyond the hyperscalers?
Yes. I mean, they mentioned about, sovereign entities purchasing and being in that low double-digit billions of dollars in terms of revenues. That was exciting to see. And, hyperscalers were 45%, which means 55% is other revenues. So that is a nice diversification as well. But that consistency from the hyperscalers is likely to continue. It's just going to be choppy year to year. Many of these companies, Apple, Microsoft, Amazon, Google, they're all going to be evaluating their CapEx budgets for next year. And each year it's not going to be the same. And so we have to be diligent about that. But for the most part, they will be spending in order to get that productivity enhancement going forward.
What about competition? A lot of people feeling that if there is just a slight blip in this annual cadence of innovation, maybe AMD can start to work its way in a little bit more. Do you agree?
Sure. I think from a hyperscaler perspective, or from the cloud providers, the internet service providers, you always want to have more than just one provider of your chips. So, there is room for competition. I think, that's always something that we have to keep in mind. Let's not forget that Intel had the majority of, data center server share for many, many years. And here we are with Nvidia really coming out and taking share, AMD as well. So competition is always something that we look for and watch out for.
Cautionary tale. What's interesting is you have holds on Texas Instruments, on Broadcom. What many have thought perhaps hasn't moved at the pace that we're expecting was that these hyperscalers would make their own chips to compete in quite the same way, using a Texas Instruments, using TSMC, for example. I'm interested in if ever you see that really coming in as a competition.
You know, it's tough. You know, the design part of those chips is, you know, where Nvidia has the advantage, along with the software associated with AI. So, you know, their CUDA, you know, all the chips are built off of CUDA, and that really provides them with the benefit that many other chip providers and chip manufacturers just don't have.
Ayoko, can you define what Nvidia is? What it actually is?
You know, Nvidia is a chip maker at the end of the day, right? But it is a chip maker and is a primary beneficiary for artificial intelligence and how computing will go forward in the coming decade.
Good attempt. I think Jensen Huang might disagree with you and say it's more than that. We'll get another stab at it in coming quarters. Ayoko Yoshioka, Senior Portfolio Manager at Wealth Enhancement Group. Thank you. Another story we've been watching is Meituan stock jumping the most in about 6 months after China's meal delivery leader posted strong earnings and unveiled a $1 billion buyback. It's a positive signal for investors who are increasingly worried about domestic consumer malaise in China. It signals Meituan is beating rivals like ByteDance, which joined Alibaba in its main market. Karen.
Coming up, we've got more of a conversation on AI. It's about the regulation. Russell Wold, Deputy Director of Stanford's Institute for Human-Centered AI, joins us. Let's get a quick check on AI in another area. Meta up 1.6%. They have an announcement. Llama foundational model was downloaded over 20 million times in the past month, approaching 350 million total downloads. Basically, it shows traction, so as Bloomberg Intelligence says, maybe some new licensing revenue stream in the horizon. This is Bloomberg Technology.
Sources telling Bloomberg OpenAI is getting closer to raising funding at a valuation of more than $100 billion in a round led by Thrive Capital. Bloomberg's Shireen Ghaffari joins us now for more. And kind of knew about this back in December. You and I reported about the idea of like a primary, more secondaries, but it's a pretty big number. More details, please.
That's right. So OpenAI is advancing talks to raise a new round of financing that would value it at $100 billion, and that round of financing would be for $1 billion, led by Thrive Capital.
Do we know why they're raising funding?
Developing AI is incredibly expensive, right? So according to an employee memo written by OpenAI's CFO yesterday, you know, the company's doing this because they need to cover their operating and computing costs, right? The incredible cost of GPUs that they need to keep scaling up their large language models to reach their goal of achieving some kind of artificial general intelligence. That is a project that just demands sort of an endless pile of cash.
With all of Microsoft's backing. Shireen Ghaffari, they still need more. We thank you. Meanwhile, California's State Assembly approved a controversial AI safety bill that requires companies to make sure their technology doesn't cause major harm. Now, the bill, SB 1047, would require companies to take precautions, such as implementing a kill switch that can turn off their technology at any time. Russell Wold is Deputy Director of the Stanford HAI, and you're discussing the bill and larger AI landscape with us because, Russell, many would say, well, that's a good thing, being able to control technology that perhaps some are fearful of. Why is this a threat to your academic research?
Well, good morning, Caroline, and thank you for having me. I think what's really important about good policy is it should solve for the harm that it's trying to solve for. In the case of SB 1047, it unfortunately does not do that. However, what is most concerning from my perspective is it harms academia. It harms academia because it hurts the open source community and makes it very difficult for the open source community, startups or other industry, or large players like Meta, who puts out the Llama model, for us to be able to dissect, understand how that works, what its impact will be for society, and we need to be able to train the next generation to be AI leaders. And if we can't be able to have access to this because this could hurt this entire community, then I think SB 1047 is actually counterproductive.
Now, what those who have written SB 1047 would come back with, and indeed we did have Scott Wiener on the show previously, is saying, look, we're not taxing, we're not asking those that are running smaller models who are spending less than 10 million or so. We are only after the big players. Why is it such a crucial impact, for example, when Llama seems to be going great? We just had numbers out of Meta that there's 20 million times downloads in the past month alone.
Right, and that's precisely the point. Meta alone right now is looking at maybe restricting Llama's use in the EU because of the overly stringent areas. SB 1047 is by far more far-reaching than this when it comes to the liability issues related to that. And the problem with that is companies like Meta won't be releasing this if there is such strong liability that can come against them for this. And without that, we won't be able to understand and interrogate these models and see how they work the way academia does, and how we do that very well. So that will cut off an entire choke point to us. Second, I would also add that academia itself, well-resourced universities do want to look into how to build these. And so there's consortiums of universities that might want to spend more money in building these so we can train the next generation on how this works. And we won't be able to do that because we won't be able to afford all of the lawyers and the legal fees that will be required to be able to stay in compliance.
Something that you just said, Russell, about sort of academic access to technology. You know, we had Nvidia's earnings last night, and a discussion with Jensen Huang I had was about the broadening out of the use of AI accelerators beyond the hyperscalers. Can Stanford Institute for Human-Centered AI get access to a cluster? Like, is this a situation that works for you?
It's actually a significant challenge for us. We actually just were able to secure 30 H100s, and that sounds wonderful, but it's unfortunate because the reality is if you look at what Meta has tried to secure, they're trying to secure 300,000. So the reality is academia is constrained as to what it can do in this particular space, and we are very limited. And what we need to do is have Congress pass the Create AI Act. That is a government subsidizing compute and data for academic research, and it's desperately needed. And academia also needs to consider how to reform here and put greater degree of investment in this so that we can be able to train students so that they can be the next AI leaders.
SB 1047, sorry to go back to it. Is this the end of the story, or do you think you'll continue to be consulted as this moves forward?
We are being continually consulted on this, but the reality is there's a chorus of people who are deeply concerned about this. It's not just academia. It is indeed small businesses that are startups that are afraid of what this will mean for them. And there's this ironic side of this. It bizarrely will entrench or make the most powerful companies even more secure in this space because they can afford the legal fees. They can afford all of the compliance fees and things that come from this. Startups in academia cannot.
Russell Wald of Stanford Institute for Human-Centered Artificial Intelligence. Thank you.
Just check in on shares of Salesforce. They're rising after the company delivered an earnings forecast, looked at topped estimates and announced some changes at the C-suite. Amy Weaver stepping down as CFO after 4 years in the job. Bloomberg's Brady Ford across it. What else did we hear other than executive shakeup?
What we really learned is that software companies, incumbents, are not sure where they fit in the AI moment. Last night, Salesforce rebranded its AI tools not as assistants, but as agents. And we heard this word over 100 times. They kept saying, we are making agents now. How is that different from the assistants we've seen with Microsoft and others? No one's sure yet. But we are learning that software companies continue to try to find their place in this AI moment, and the revenue is not here yet, but hey, just wait a year or two.
I saw Amy Weaver's post on LinkedIn. She's been CFO for 4 years, but Salesforce for 11. How's the market taking that departure?
Yeah, the market, I think, is reading this as, wait a second, is that everlasting Salesforce succession story starting to kind of get rolling again, right? 4 years is a relatively short CFO tenure. She was well liked. She's not leaving for another opportunity, it doesn't seem. So it's, hey, is this another phase of Salesforce's growth? They're doing more consumption-based pricing. The business model's changing a bit. And maybe they just feel they need to bring some fresh blood in at the top because, again, that idea of who will one day replace Benioff is a kind of everlasting question.
I mean, who has been there a significant amount of time that people feel can step into that void?
Their chief operating officer, Brian Millham, he has been there for very long and has taken on a much wider, expanded role. I would say if tomorrow Benioff decided, hey, I'm done with this, it'd probably be him. But at the end of the day, investors would probably like to see a bit more new talent coming in, maybe from the outside. That's something that I hear often.
And an AI boost that can't come quick enough to revive momentum, so says Barclays. Brody Ford all over these earnings. We thank him for it. Now that does it for this edition of Bloomberg Technology, a big one.
Yeah, it was a big one. Recap it on the podcast, where to find the Bloomberg Technology podcast on Apple, Spotify, iHeart, and all the Bloomberg platforms. Big thanks from everyone here in San Francisco, Caitlin, Jackie, and Kara in New York City. There's one day to go in this busy tech week. This is Bloomberg Technology.